How big of a deal is this Noble deal today?
Well, it is much smaller in scale than Chevron's last attempt at doing a deal, which, of course, was Anadarko Petroleum a year ago. That one was $50 billion enterprise value. This one is only $13 billion, so 1/4 as large. But needless to say, everybody's stock is down since then.
Exactly.
So the fact that this is the first large buyout in oil and gas since the COVID pandemic began is pretty notable.
So there's two interesting things in what you said. I mean, on the one hand, it sounds like maybe the landscape has stabilized enough that buyers feel comfortable about, the prices that they're paying. On the other hand, I mean, if they had paid $38 or $50 billion a year ago, look at how much the world has changed then. So what do you think is the motivating factor for Chevron today?
Well, Chevron's stock is down about 25% year to date. Now, that's pretty bad on an absolute basis, but relative to the vast majority of other oil and gas companies, that's actually an outperformer. So that equity represents a pretty good currency for Chevron to use. Plenty of other large cap oil and gas producers have shares down 40, 50%. In the case of Noble, it was down 61% as of this past Friday. So not everybody has this kind of currency. And frankly, even if somebody else has it, does not mean that they're inclined to use it right now.
I think it's interesting that you are actually not a big fan of this deal. You said you weren't a fan of the Anadarko potential last year, not a fan of this one. You said Chevron does not need to do this deal. You'd rather see them move away from their current level of austerity, which you think is unsustainable. Why do you think they should put their money to work that way? And what do you mean by unsustainable level of austerity right now?
As part of the response to COVID, every oil and gas company on the planet slashed capital spending, in some cases to the lowest levels in decades. Chevron is no exception. Chevron's capex right now is a quarter of what it was 2012, 2013. And some of that is just lower cost, but it's also less activity on the company's existing asset base. So if the choice is invest more in the assets that the company already owns or add more to that asset base, I think the economic option, better economic option would be to reinvest organically. Now, they can do both, but if it is a choice, then I think it ought to be organic capex.
And you're
more
noting
so
here,
than M&A.
Sure, you're saying you're still comfortable with an outperform, so this isn't a deal breaker for you. But why do you think then for the last couple of years, instead of focusing on investing to grow their existing assets, why do you think they keep looking for these external plays?
Well, almost everybody in the industry does some level of M&A. Chevron has been more aggressive about corporate buyouts. It's worth pointing out, 90% of the deals out there are asset level deals, so an individual field or an individual block of acreage. Noble is the exception that proves the rule. Anadarko was also the exception that proved the rule. For a company the size of Chevron, Noble is not a game changer either way. So yes, I think this is not probably the best use of capital, but it's only 7% of Chevron's enterprise value. So it's really not a make or break decision either way.
Pavel, as I look back on the Chevron deal from last year, Anadarko, I think they were lucky to fail. Because right now they'd be writing down that deal, or in a year or so they'd probably be writing it down in a big way. Is this deal far more likely to go through, number one? And number two, as you look across the horizon at these lower prices, do you see other consolidation deals coming in the pipeline, so to speak?
Yeah, Chevron absolutely, in retrospect, dodged a very big bullet by not paying what they were originally wanting to pay for Anadarko. So again, this is very different scale. And do I think there will be a bidding war for Noble? No, I don't. Partly because it's a much smaller company. There are lots of things on the scale for somebody else to buy, if indeed somebody else wants to, replicate these kinds of assets elsewhere. Anadarko was much more of a kind of special, one-off situation. There will be more consolidation, but again, the vast majority of the consolidation, we've seen this for the last decade, is companies swapping assets or monetizing assets to each other rather than doing corporate buyouts. Asset deals are, number one, cheaper for the most part. They're also easier to integrate. They have less operating risk, less regulatory risk for what it's worth. And they give you only what you want and none of what you don't want. So maybe Chevron wants all of Noble. In most cases, the buyer wants to fill a particular gap in their asset base. And that means buying one individual country, one individual basin, rather than a whole smorgasbord of assets, which is what Noble or Anadarko represent.